The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, everyone. Basil Chapman, Tiger Technicians Hour. It's my pleasure to be here this Tuesday, July the 22nd. My, how the time's flying. And flying, talk about flying. The Dow is up 80 at 17,131. S&P is up 12 at 19.86. The comp index, of course, Apple comes out with its earnings today. Comp index is up 38 at 44.63. Gold is down 8 at 13.06. Silver is down 0.06 at 20.94. High-grade copper is in that 3.2 area, which is, so far, that's good. Dollar is up 24 cents at 80.80s. This is depends on what you're looking at, but it is a very sharp move. Leg C in the Chapman wave, leg C in the daily chart, leg D in the continuous contract. And you've got, let's see what else. You've got your bonds are down 5/30 seconds at 138 and 9/30 seconds. Covered a chunk of these things. So let's say that Tiger TV, TFNN right here, we are committed to education. We are committed to giving you the very best that we can do with our technical analysis. We start at 8 o'clock, and 8 o'clock is certainly this Eastern time, a great time to start. Why? Because it's prior to the market opening. You get a lot of information. And I would have to venture to say that within the context of programming, within the context of giving you current information and analysis, different techniques, a great education, a great medium in which to sort out and stir the pot and find out what works for you. This is just a great media enterprise. So we're looking at the VIX, the volatility index, down at 11.85, at down 0.96. And what I said to my subscribers on my opening call this morning is that even though we were short in certain positions, we tightened up the stops, and we're not prepared to just hang around here, because if the Dow does take out the previous high of 17,151, you have to consider that, especially with in my 4 Dow quartet index stocks, GE, IBM, Triple M, and UTX, you've got 2 that are very weak, GE and UTX, and both of them in their own ways are kind of pilot light stocks. GE for the shorter term, UTX for the intermediate term, and IBM and Triple M are doing very well. So 2 are doing very poorly, and 2 are doing quite nicely. Not at all-time highs, but very nicely indeed. So we're going to be watching this close very, very closely. But most importantly, when you're looking at my charts, you will see this is the daily chart that I always show when we start the program, the daily chart of the September, in this case the September E-mini futures contract, and it's trading at 1979, and it has taken out the 1978.25 previous all-time high. Now the question is this a brand new leg A to the upside, or is it a continuous pattern E/A? We don't have to answer it right now because it's not the close of the day. But in the meantime, the 120-minute chart has gone to leg C, and invariably in the Chapman wave, once you get a buy mode, and I've got to change this plus sign to an up arrow, remove, up arrow, that indicates you're in a buy mode. And that buy mode should, in fact, take it to a leg D. So there should be still higher prices in the E-minis as this leg C at some point will make a peak C with a lower high bar, and then break that high bar to start after at least 1 bar to break it to the upside and start leg D. Very, very important. So, I had a couple of questions, so I'll deal with it right now. XLF which is the S&P Select Financials, is really not doing that well. I mean, it's not doing badly, but it hasn't broken out. And it needs to break out in the daily chart. It needs to break above this trend line resistance. It's trading at 22.94, up 9 cents. It needs to go to 2023 or higher, and that'll immediately target 2304, the high on the 16th at 4 o'clock, and then the most recent recovery high, 2307, was the recovery high on the 3rd of July. That'll be very important. But in the 120-minute charts, already started leg B, and the stochastic and MACD are improving. They're not great. They are improving. Now I'm going to move the 120-minute chart away and show you that in the weekly chart, this is very interesting, because in the weekly chart, what you've got is a peak D. D's where you've got to be a little bit careful. And look, you've got a peak D to 2307. And then you get that little high of 2304. And now you're trying to tackle that with that long-legged doji of last week. So a close, and it's very important that not just a spike, but a close above 23, what did I say, 07? This week will be very important. It will say the XLF does have enough energy to join the market rally and to lead us to higher highs, higher recovery highs in this case. But the most important thing is 2335, not 23, 2235 is the 200-period exponential moving average in the monthly, and 2190 is the 200-period exponential moving average in the monthly. And the MACD is still good, but starting to narrow as the fast-moving average comes down to test support at that red line, the slow-moving average. And the MACD is still telling us that there's strength. The relative strength says we're getting a little bit toppy, but the on-balance volume says, hey, watch this real closely, A, B, C, D. Could be a leg E, and if it becomes a peak E in the on-balance volume, I suspect that the XLF will start to pull back. So far, this is triangle formation, and triangle formation says, yeah, get to the 23s and get there quickly, because that'll be a positive, because if you fail, 2286 and then 2279 will be the support levels to watch in the XLF. And GS, which used to be a great leader, is once again showing some strength. Very strong leg A to the upside, very strong leg C in the weekly to the upside. So we're going to be watching Goldman Sachs very closely here. Why? Because if Goldman is able to continue leading like this, it does give some power to the upside. Yesterday we were asked about the KRE, and the KRE are the regional bank stocks. They're not doing very much at all. Did I not notate this yesterday? I thought I had. Oh, I did, but it didn't stick. Huh. All right, doesn't matter. Tell you what I'm going to do. Just going to give you the numbers. KRE right now is at 39.04, up only 25 cents. That 200-period moving average in the monthly at about 38. At 3807 is very, very strong. A magnetic field there, trying to attract it, not let it rally very much because it keeps wanting to come back and test it. In the weekly chart, not a great pattern. At 3905, it really needs to get to 3963 or higher to say, I'm going to go back to the upside. Otherwise, it's stuck. And we're looking at 3843. Which is some 60 cents lower, as very important support. And the 200-period moving average is at 38.62 in the daily, and it's trying to take off from there. Going to be watching these real closely. One other thing is the IYT. I saw this earlier on. IYT had a spectacular move as a breakout to an all-time high, leg E in the monthly. Leg F, I'm calling it F for now in the weekly, and in the daily it's leg E in the traditional way of counting it, leg E. So we're going to be close to some kind of very strong resistance levels in time, and maybe price very soon. Question that then, where's the TRIN, the short-term trading index, the ARMS index invented by Richard Arms is trading at 1.16, the high today is 1.54. So it's actually showing some selling pressure, even though the market is nicely higher, up 0.58% in the S&P, up 0.43. Now, this is very interesting. The Dow is up 0.43%. Look, that is challenging the arch formation, broken out from this. I can get rid of it now because it didn't work at all. The most recent, it did work for just 2 days. Now today it broke above. So that was that little dash sub-channel line that I was showing there. And now this is going to be very interesting. Why? Let me show you something. IYT is breaking out. That's very important. Good technicals all the way around. Look at GE. GE is trying to come back. It's struggling. It's down 2 cents, having hit the 200-period moving average and then bouncing both yesterday and today. It's G's at 25.95. It's broken the down channel and it looks terrible. The weekly channel says, the weekly chart says the up channel is taken out, not taken out yet, but it could be taken out very soon. But in the meantime, we're looking at a potential inside H formation. That means that you went to a monthly high, came straight down, having a bounce that's arching over, making the lowercase h formation, and that makes the left side 24.32 in the monthly really important to hold. So that's weakness in G. But wait a minute. IBM, way off its highs, certainly way off the highs of 2013 at 213s, maybe 215-ish, goes down to the 172 area, bounces up to almost 200, pulls back to 180, and now is at 193.26. So the monthly chart is just saying chop, chop, chop. But now this is going to be very interesting. The weekly chart says, I made another peak C. The last one failed. This one hasn't quite failed, but it's been terrible up until the candle of the week of 27th of June, where we went to a low of 179.27. Hey, look at this. This is now 90. Yeah, okay, so this is A. This is an inside buy signal going A to B. And we're going to see, can by next week or even this week, you take out the high of 195.95. That'll be very important because the moment it takes out the left side high of 199.21, if it does that at all, that'll start leg D to the upside in the weekly. And now if we go to the daily chart, you'll see we made a peak D. We're under the high of 195.95. We're going to see how this pans out. If by the end of the day, IBM is only up at 192.50 or so, and then tomorrow's down, we could challenge the 190.77 trend line support. We'll look at Triple M and UTX when we get back, as well as in the den questions on XLI and others. I'll be back. Basil Chapman, Tiger Technicians Hour. Dow's up 71, S&P's up 11.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 50 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi folks, we're back. Basil Chapman, Tiger Technicians Hour. You know, my service is the opening call. Check it out, front page of TFN. Very comprehensive look at the markets every day. Starting off with the Dow chart, as I showed here, giving you the parameters, talking about the fighting chart patterns. There's the arch formation. There's the little cup formation. There's the up channel. There was a down channel, which I just took out because it's useless. It's already been pierced. And walk in the 9-period moving average is 17,049. What was today's low? 17,040. It's amazing how that works. Now, okay, let me just quickly finish this, and we had a couple of questions. I said I'd look at Triple M, 3M company, doing very nice here. In the weekly chart, you see how it's walking the 9-period exponential moving average, made that oval cluster pattern, which could be a breakout to the upside. Let's see. If this is F, it has to be F/C. That's going to be very important, right? And the monthly chart leg F, weekly chart alternate wave count, and the daily, either it's a G or it is a B at the top here. So that says watch closely, because a break above 146.25 starts a new leg to the upside. UTX, look at this. We were short this. We took profits. We also had put positions, had nice profits, total profits in those. And I did not hold it. It's just, you never know how the market is going to respond, even though my bias has been very negative towards UTX. Look at UTX down 244, 2.18%. At 110 and 54. So what we're looking at is it broke the left side low of 112.44 decisively today. I'm not sure it can bounce back into the 112.44 level right now without some testing. So I believe that what we're looking at in the weekly chart is that at some point the Chapman Wave Roman candle, that's this candle right here, of the 7th of February, very big candle, high of 114.74, opens at 114.11, pops up to that 114.74 level, spirals down to 107 low, exact round number, and then closes at 110.73 before rallying to a peak A, peak B, peak C1 at 120.66, and C2 at 120.19, and then it plunges. I suspect it will go there sometime in July into August, and that would be to test the 107 round number, and I wouldn't be surprised if it actually breaks it. We'll see. So that's just a heads up to say you're starting to see a rollover into the different sectors. So here's another question. The XLI, or XLI, I think it was the XLI. Let me just double check. Yeah, the XLI, which is the S&P Select Industrial Spider Fund. It's under the high that it made of 55.82. Type that in, 55.82. That was leg E in the monthly chart in a beautiful up channel, went to the resistance and then pulled back. 52 is the support, is the 9-period exponential moving support. MACD is great. The stochastic is very good at 94%, but it is pulling back a little bit. On balance volume says, watch out. This is the move that I'm becoming more and more cautious on in the general market, because my monthly charts, weekly charts and monthly charts in some sectors are starting to show quite overbought levels. But there is what can we call this? A triangle, and the triangle has similar degrees of angle. So in this particular instance, it says you're reaching an apex. If there's a break to the upside above 54.85, that's 40 cents from where we are right now, 54.45, that's going to say, hey, the next bar to look at would be 55.17, the bar of the 27th of June. But if there's a pullback to the downside and the low of 53.77 of 2 weeks ago is taken out, then very importantly, we'll be looking at a possible test of the 53.41 level, because that's the kind of candle it is. If we break down and start to go into halfway into the wick, that says it should go down to the bottom. So I'm watching this real closely as this symmetric rather than asymmetric triangle in the daily chart has not far to go, 54.63. Just another 20 cents higher, and that's a potential breakout. And then 54.72 was the last high. That'll start leg B. So I'm watching this one very closely as well. Another question was IWM. Now this is very interesting. I had a question from a subscriber last night saying, is IWM, the iShares Russell 2000 ETF, ready for a move to the upside? Well, I studied the chart, and my answer to him and to myself was yes, but. And the reason why I said yes, but, is that the 9-period exponential moving average, which it hasn't closed above since it broke down back on the 7th of July, is at 114, and I needed to see how it holds above that and what happens after that. The 120-minute chart is good. I'll be right back. Basil Chapman, Tiger Technicians Hour.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi everyone, Basil Chapman. We are back. Dow's up 67, S&P's up 11. This is going to be very interesting because in the context of the IWM, that's the Russell 2000, is stopping right here at the 200-period moving average in the 120-minute chart. But the technicals, whoops, let me move this up here. This is the 120-minute chart. Look, the technicals are rallying. The stochastic's not at 80%, but this is a good sign so far. So this is one of the things that we've been looking at in the market for a long time, since the summer of 2010, that when there are corrections, sometimes they are high-level corrections where you get a rotation. Look, you've got two pretty important Dow stocks, GE and UTX, not participating at all, and yet you've got some others that are taking their place, and therefore the Dow is not moving up with the S&P as much, 0.56% for the S&P, 0.40 for the Dow. Dow should be like 0.45, 46. So it's close, but it has been hampered. And what's really important about this is that in this rotational correction, all of a sudden you've got something like the IWM, which is really tanked. It's gone from 100. This is the deepest correction it's had in a long time. From 120.97, the Russell 2000 has gone down to the low of 4 days ago to 112.20. So while that doesn't sound like much, 3 points, 112.20. 3 points doesn't sound like anything at all. I'm sorry, 3 points. 8 points doesn't sound like anything at all. It is for this index. Let me show you the daily. Look, I'm stretching it out. It was a while back. It was back in April. This is a daily chart that it had those pullbacks down, and that was also with the IBB. and the NASDAQ biotech ETF, which has rallied just about to resistance now. So we got to look at this and say, okay, tell us what's going to happen. Well, the weekly says, yeah, you could rally, but you're really stuck in a trading range. Could be a very nice percentage move, but you got to clear 115.48 on the weekly to really show that's the 9-period moving average to show that you've got upside strength. So I just wanted to show a couple of things here, and that was one. The next thing is FLT. This is an IBD stock, Investors Business Daily, one of their favorites. It's acting very well. The weekly, this is Fleet Core Technologies. Finally went to that leg D. I'd already circled it a long time ago. Went to the circle. The high so far, 134.02 from June. We're at 132.09, really close to testing that. Now, in the weekly, just real simply, you grab your trend line, you go like this, whoops, across like that. That's the top line showing resistance, a declining, small declining trend line, but a much steeper declining trend line at the bottom. And it says that if it takes out 134.02, that'll be very positive for Fleet, FLT, Fleet Core Technologies. And it's got this long, bumpy road against this resistance in the daily as well. And that says anytime you see that FLT can cross 133.29, it's going to test the 134.02, probably going to test that very quickly. This is a tricky part because you can see how many times price has been repelled. Normally what I would do is I would go like this in my own trading. I say, okay, put that in, make that a red line, and show that that is the Chapman wave inside track reversal zone. So you can see how often one, from the high, 1, 2, 3, 4, 5, 6, 7, 8, 9. This will be the 10th attempt, 10th bar should try to tackle to break above. In this case, it'll be above 132.84. And yeah, there is a drop bucket pattern. There was, in fact, a very sharp pullback. So let me just do this as well. The question was, there was another very good question in the gen. I'll get to it. Basil, can you envision a scenario where IYR achieves 76.21? IYR, that's the REIT, the real estate index. Where did it go? IYR. There it goes. A leg D, leg E. So this is very important. You've gone right back to the previous high and then surpassed it. And that says to me, okay, D to an E in the Chapman wave in the daily. So this is saying, hey, I'm real close to some kind of a test of a pullback or a breakout. I can't rule that out because the stochastic's at 89%. NACD is very strongly higher. But you remember what I said the other day when we were looking at the IYR, which is the iShares, Dow Jones, U.S. REITs or retail, what is that? REITs. Yeah, it is REITs. So it's the REITs, but real estate, RE. So I always called it the REITs, but it is actually real estate REITs. That's I think mostly commercial real estate REITs. I've been looking at this for years and years and years. I should remember exactly. But in fact, it's acting very well at this particular point. It's recycled up in the weekly. And what I'd said is you can think of this also as a dividend stock because it has the REITs that give some kind of a dividend. So it's not a real estate. If you had to look, yeah, it's got Vornado, it's got Simon Properties, it's got Boston Properties. Yeah. So when you look at something like this, it's different to looking at the dollar UGX, which is the Philadelphia Real Estate Index, because that's acting very poorly since it made its 213.81 peak F-top. I think it's a peak F-top so far. That's what we're calling it for the monthly chart. But it was a peak D in the weekly, and you've got that cup formation that started to fail at that resistance level. So I'm going to be watching this real closely. Now, when you're looking at the real estate, that's a little different because that went to an unusual G-top in the weekly, and then pull back very sharply. And now if you look at TOL, Toll Brothers, nice pop-up, but so far that's all it is a pop-up. Lennar, L-E-N, Lennar Daily, nice pop-up, good repels at the 9-period exponential moving average. This is a very select rally. Now I want you to do what I wrote down because I finally turned my head to see the page. Look at CMG. We were waiting for CMG when I had calls. I said, CMG, we're waiting for leg D up. I don't know when it can do it, but it should make a leg D in the monthly. Well, lo and behold, this gap goes right into leg D. It had an open of 663.99 on excellent news. It's had a high so far today of 663.99. We're almost at the high. And the daily says big spike up. It's either G or brand new A. Let me see. Or AB. Oh, it could be a brand new ABC. Or a C. It's got a number of letters that it could be. But most importantly, the weekly chart is saying, I am, in fact, an E/C. Preference to the E right now. There's no need to think of it as a C. An E, and it's still very strong. The stochastic and MACD are very strong. So this is going to be important. Why? Look at Netflix. Netflix, earlier in the after the bell yesterday, spiked up about 7 points, and then it kind of gave it back. Then it went up 12. Now it's down 21. And I've been wondering for ages what the notation would be, because it was just one of the most unusual chart patterns that I'd seen in a long time. And I said, okay, that's going to be leg F in the monthly chart. At least for now, that's what I'm calling it. But the daily, the weekly has recycled to a D/B. I feel comfortable with that. And the daily chart has made a high. Peak F in the Chapman wave, the 6th highest peak, with the pattern that you remember I discussed it the other day. The shoulder on the left, the head in the middle, another shoulder on the right. I even typed in LS, left shoulder, head, and then right shoulder, and a breakdown. I said the reason why I don't like a head and shoulders pattern is by the time you recognize it, a big chunk of the move has already been made. That's not to say it doesn't work. It's just to say that in my world, I want to identify it earlier. Now, I made a big mistake. I wanted to short Netflix for my subscribers with a pattern that I call the Chapman wave stalk leg formation. A long leg up, made up of many peaks, but a long leg stalls and makes kind of an oval pattern, and then that oval pattern gets pierced, in this case the high of 450.82, the week that was on the 18th of June, gets taken out, and that starts the neck. The neck then goes to the head, so that corresponds to the head and shoulders pattern, and then it starts to pull back. It was a low-risk trade I didn't have the courage with Netflix to take, because all you had to do is make your stop at 475.88, because if it broke out even 1 penny higher than the all-time high, it could in fact go higher. That's the way technical analysis works. So the fact is, it's acting very poorly. It tells me that it's going to probably be going down more. Now look what's very impressive. So you've got this divergence, and now look, Q, Q, Q. The 3 Qs, I'm calling this leg E. Could be brand new leg B, but at the moment I'm calling it leg E. I'm calling it leg E/B in the weekly, calling it very strong leg F, and that could have recycled in the monthly, but at least for now that's what we're calling it. And look at this. You've got the 120-minute chart also recycling, just a whole bunch of recycles. And it says that at this particular point, there's nothing really negative. You've got support. It's at 96.65. The QQQ series trust, 96.14 is a very strong support that it really does have to hold, because if it breaks under that, you have to call that leg E and then peak E in the 120-minute chart. So got that one. There was one other thing I wanted to talk about. Yeah, that's right, Apple. Did I write down Apple? No, I didn't, but I'm writing it down now. So what I said yesterday, past week or so, we were getting calls, and especially yesterday, I said, if there wasn't earnings coming out with Apple, yesterday I said I probably wouldn't have a position, because it just does such big things when earnings come out. But on a purely technical basis, it's making leg D in the monthly. That's good. It's making a leg E, possible peak E in the weekly. MACD is good, stochastics at 91%, and that's saying that at worst you should see a pullback to the 91.95 level, the 9-period moving average, and then a bounce back into the rectangle, because if it goes to 88, that's very negative action, and Apple at 88 will impact the Qs and anything in the NASDAQ. But if in fact there's a spike to the upside above 97.10, well, you can see by the many charts that you've been looking at that could be quite a huge move. I'm suspecting that we will only know at the open tomorrow whether any good news is being fulfilled to the upside or any bad news is seeing a gap to the downside. Normally, the pattern says with the MACD and the stochastic so poor that you could get a Chapman wave 1-to-1 price extension. It's time and price. And what it says is if there is a breakdown tomorrow, then by tomorrow or the latest Thursday, you could see the 92 to 91 area being tested. Now, I don't want to play games like that, so we don't have any position whatsoever. It's one of those things that you could analyze it 100% correctly on a purely technical basis. After all, it made the Chapman wave cup and ladle breakout pattern. It went to D. It's pulled back from D. It also has a little mini circle that you could put in between that high of 96.80 and the low of the 10th of 93.52. So it's done almost everything it needs to do, and it's pulled back into the oval. In the cup formation, it's pulled back. But the cup formation says that if you break down and then you go halfway into the from the low bar, the base of the cup, in this case 89.65 to the high of 97.10, if you go halfway and you're holding there, there's a good chance you're going to test the bottom. I don't want to be in this game. It's just too high risk, unless you did something like Daryl shows in his show in the Natix platform, where you could actually have a beautiful up and down strategy, so that if it breaks to the upside, you have one strategy. If it breaks to the downside, that would be great. So now what I wanted to show is, so that's enough with Apple. All I can say is tomorrow, if it's closing anywhere into the 96.50s and holding, that'll be good. And if it breaks down even just $1.50 to the downside at the opening tomorrow, that's going to say, uh-oh, be careful, we could be going down quite a bit. So I'm going to just step away from that. But what I want you to show you is the TLT. The TLT has gone to leg C, probably peak C today, with a stochastic at 90% and the MACD still expanding. Because it just nicked the 110.74 to the downside, that started a brand new upcycle, and that upcycle says that this is leg C, probably peak C, and then it should pop above 115.63. 115.63. Whoops, didn't mean to do that. Let me just type that in. 115.63 for, let me double check. Yeah, 115.64 starts leg D, if that's tomorrow, the next day. So because of that, I'm looking at this and I'm saying, this is very unusual. Market rallies very strongly with bonds. You don't see that very often. Not quite in this manner, going towards all-time highs. I'll be back. Basil Chapman, Tiger Technicians Hour. I'd love to take your calls at 877-927-6648.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Folks, we're back, and great question here was ITB. Well, ITB is the iShares of the U.S. home construction, and it shows in this pattern that we're looking at in the monthly chart a cup that double topped at in May of 2013 at 26.21, pulls back to about 20, runs up to a higher high at 26.56, and then pulls back in a smaller cup formation, trying to rally, and the 200-period moving average of 25.17 is really strong resistance for the ITB. On the weekly chart, there was a cup formation that fails at the, I call it a right shoulder failure, pulls back, and now it's having a good candle compared with last week's candle, but it's the 24.04 level that it needs to pierce by Friday and holds nicely above in the 24, or I'd say 24.40s or higher, to be able to say that that has held the 9-period moving average support. And the daily, nice pop-up, but you've seen exactly the same thing in Lennar and Toll Brothers and others in the home building sector. And this is going to be really important. Does it turn 2372, trading at 2393 right now, the ITB? Does it make that support and go straight for the 50-period moving average around about 2407, which will coincide with some of the other resistance levels? This is just the first day of a pop-up. If, in fact, we see a rotation and all of a sudden the home builders and the materials, the home building construction area, start to rally, that'll say, hey, we're not going to go down very sharply here at all, more like a single-digit percentage decline, if in fact we do decline. But most importantly, what's happening now is that we've got just the first sign that there could be a rotation into another sector, the home builders and the materials. But I don't know yet, and were I to get in, I would only start a position in the ITB here at 2393, and I'd have a pretty tight stop. I'd have a stop of less than a point, probably about 75 cents. Why? Because if it starts to roll over, it's going to roll over very quickly and then go back and test the low of 23.38. So that's what I'm thinking about the ITB. A question about junk bonds, JNK. Now, folks, the charts that you see here, it doesn't come automatically. There's no software that does this. It's me. I'm the software. So it's got a peak D in the daily at the kind of doji high of the 24th of June at 41.82, went down to 40.941, round number low, a low and close on the 17th. So this is quite good action, but it says a rectangle formation trading at 41.17, up 7 cents on the junk. These are the junk bonds. The real title is Spider Barclays High Yield Bond ETF. So 41.25 to 41.32, those are the levels that J&K has to take out to be impressive. Otherwise, it's just got a failure pattern all over it. And so that's what I'm looking at here. So let me just write this SJB. Can circle it. Okay. Now there was a question. Let's see. So I want you to do that. I don't think I'll have a chance to get to it. Okay. Let me give you this because we've got a great options show coming up. Folks, we've got programming from 8 o'clock until 6 o'clock continuously with just wonderful guests. Let me go to the market. I'm going to go to the Dow for now. The Dow needs to break above 17,151 decisively. If it does that, then there's a channel line up at the 17,196 level that we will talk about. In the meantime, back at the ranch, the volatility index, where is it trading right now, is actually not doing too badly at all. It is trading down 82 cents, but it hasn't gone down to the 1028 level. You see, it's starting to make lower highs and higher highs and higher lows. And all that says to me is we've got to be really careful here, very selective. Yes, you can buy whatever it is you think is looking good. I'd have fairly tight stops, and don't be afraid to start looking at shorts, just like we're doing. If it works, it works. If it doesn't work, it doesn't. But that's the way you got to do it. If your technical analysis says it's weak, stay with the weak stocks on the short side. If it's strong, stay with the strong stocks on the upside. You're going to be watching the VIX and the markets very closely for the close today. I'll be back later today, but hey, have a wonderful day, and I'll be back tomorrow as well.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.